Hey everyone, welcome to my channel, The Stock Analyst. This video is again on Clover Health, which has a ticker symbol of CLOV, which is Clover. So we have been making back-to-back videos on Clover Health because first time we made a video on this one, which was around just $12. Then the next morning, you know what happened, it went to 17, then 25. So we made a lot of money, and playing with the call option was a very profitable trade for us. So if you have made that kind of profit, then congratulations. And I know whoever is subscribed to this particular channel, we have been making money. If you are new here, please make sure to hit the like button and do not forget to subscribe to this particular channel. So this video is just an update on the price action because it seems like we might have found a bottom or a support, and also some articles, some call option, and what is the thing you can do, especially if you're holding a lot of shares. How can you make money using the implied volatility on the option side as well, which is covered call, selling covered call. So first of all, today was not bad. It was up 4.8%. After market it came down, but again you can see the chart. This is called a squeeze, right from here 13.8, it went all the way to 16. So almost $2 increase, and with a span of only few minutes. So this is the power of squeezing. You see, whenever it decides to go higher, it just goes higher, right? So it takes, but anyway, after that seems like it has been moving sideways, and around 14.85, 15, this is the area it has been moving. So some kind of consolidation happening. This is a very good thing. So now let's look at the chart here. So I'm showing you a daily chart here. So first of all, look at the RSI. It went all the way to 91. Anything can go more than 100, so it makes sense it will come down. So anything below 70 is okay, because over 70 is overbought. So currently it is at 61, so which is good. You see last time it was also 61, came down, but anyway the RSI is now cooling, which is good. Look at the MACD, it is so high. It makes sense it might move sideways, can make some consolidation, or it might come down a little bit. Again, so many things can happen. These type of stocks are momentum stock. It can go very fast, and again sometimes technical matters, sometimes it does not matter. If the overall market is red, then these things come down anyway. But just want to start with the daily candle, then I will just move back to an hourly candle. So first of all, from 12, we know what happened. It opened around 17, it went all the way to 25. Next morning it started at 29, then came down all the way. But for last 2 days, it seems like we have found something, and the important thing is here, right? So you see lots of consolidation happened in this area in mid-January. Then today we are within this particular two lines, so support and resistance, which are around 13.3 and 15.9 in this area. As long we move sideways and we consolidate, then it will mean that we have found the support of 13.3. But if 13.3 is broken, then this thing can even come down. And how much it can come down? Maybe around this area. And see why I'm drawing this area 11.5. You see it was at some point it was a resistance, then it came down, then it became a resistance at one point, and again it was a resistance, but just because of the short squeeze it went up. Also there is a gap between 13.3 and 11.5. so in case 13.3 support is broken, that thing can come to 11.5ish area, but that is okay. If it comes down, you can always buy more share, or you can just load on more call option. But this is the thing. Otherwise, if we can maintain 13.3, I think it will move again towards 15.5 and towards $17. Don't forget, today when the squeeze happened, it went all the way to 15.8, and this is the line I'm talking, right? So let me look at a 15-minute on a shorter time frame, why these things are important. So you see, back to back 15 minutes, so in half an hour it went all the way close to 16.3 and came down. So this is the most important thing. We have to move sideways, but we should not break the support at 13.3. as long we can do it, I think it is getting ready for another squeeze. On the other hand, we have to break 15.8, or you can say $16 area, or maybe I can just update based on today's action, because you see the bottom of the candle here, this is the top of today's candle. Also these two candles are also here, so maybe let's say 16.3, which was the high of today. So we have to break 16.3 in order to go and hit $18 mark. So this is one thing. Other than that, on a 15-minute candle, you see the RSI moving sideways and nothing specific. The only thing is if 13.3 is broken, that thing can come all the way to 11.6. This is also important. We need to have enough volume. So you see the volume today, the volume came, the price went up, then with time gradually it came down. Again, if there is a volume, it will go up again. And what is happening with the share in terms of volume today? So the average volume is 89 million and today's volume was 142 million. So it's still lots of volume coming, but again on the selling side it is coming down and down. Look at the short interest here, 24%, still is high. Anything over 20% is high. So still there is a potential. If more volume comes, then this thing can pump higher and higher. Before I talk about some other things, let me read one article which came today, Friday, June 11, that Run for the Hill says Bank of America. So what happened? So it talks that by ending in a downgrade. So they said downgrade to sell from Bank of America, blah, blah, blah. So Thursday morning, downgrade the stock from neutral to underperform, assigning a $10 price target. This figure suggests shares will decline 34% over the next 12 months. And if you go to Nasdaq, it has a buy rating and you can see the average price target is 10 with a high of 10 and a low of 9. So a couple of things I want to mention, that whether this analyst forecast is correct or wrong, but keep that in mind. If there is a company, it has a valuation of let's say $15 a share, just because of short squeeze it can go to $30 or $40, but it does not mean that that is the actual price or this is the valuation of this particular company. These are momentum play. It can go up and then come down, but in a long run this thing will come back to its original place. So do not buy anything at $40 just thinking, oh, it will go to the moon, then maybe it will be back holding this for next 5 years. Yes, there are some things. AMC is different. I love AMC, GME, those are different things, but these kind of things you need to make sure your risk and reward, you need to think what you are doing. Are you just doing a day trading, a swing trading, or a long-term hold? If you are a long-term holder, do not buy at a peak. When it comes down, maybe then the point you should buy. For day traders or swing traders, just look at the chart, make your money. But keep that in mind. If I say it will go up, it can come down next day. The market can become red or anything can happen. It's stock manipulation. So keep that in mind. Risk versus reward, that is the most important thing. Okay, so I was talking about few stuff, but let's look at the call option volume here, and I want to talk about few things here. So first of all, look at the call option which will expire on 18th of June, which is after 7 days, and look at the open interest is still at 15 strike price. There are 20,000 call option, then 17 strike price, 10,000, 22,000. So you get the picture here. Look at July expiry date, and let's come down. So still you see lots of open interest, especially around 20 strike price, 19,000. So some calls are still waiting. But look at the implied volatility, 192%. And sometimes is it if you have lots of share, at least more than 100 share, you can use this implied volatility in terms of your favor to get some extra money. Let's say you have 200 share. So you are not going to touch that 100 share. The other 100 share you can sell covered call. So if you have it, or let's say you are buying it today, so you buy 100 share for $15, right? Then you buy 100, then you sell a covered call for this strike price for July expiry date, and right away you will get $330 return. So in other sense, you are getting $330 for 100. So basically for one share you are getting 3.3. So instead of 15, basically you are buying it for 15 minus 3.3, which is around 11.7. So if the share price goes up, I'm just using as a 15 as an example. If you want, you can just use even 20, or let's say 20. So if you buy at 20 and if you sell, so basically it will be 18 point something, right? So if it is not exercised or the share price will never go to 20, then no one will buy your shares at $20 because it does not make sense. Because if the market price is 15, then why someone will buy at 20? So the premium you are collecting just because of selling that call, it will be in your pocket, right? once July 16 will be gone, then this call will be worthless and you will keep the money. So you get the idea, right? So when the implied volatility is higher, you will see this 20, 25, those call options has a higher premium, right? So when the implied volatility will come back, maybe this one will be only 25 cents. So if you sell a covered call here, so you collect 2.25, in case the share price goes higher, you are still selling the call at your shares at $20. So you are buying today at $15, but you are selling it at $20. At the same time, you are also collecting 2.25 interest. So basically you are selling at 22.25. you buy at 15, but you sell at 22.25 in case it goes up to $20. Or if it never goes to 20, then yeah, you sell and keep the money. So this is a very good strategy. Whenever something is very hot and the implied volatility is very high, you can always use that in your favor. In case this thing can go to $50, let's say, yeah, in that case you have still 100 share, you can sell for $50, and this one you will sell at $22. But again, you are not losing anything, right? When you buy a call option, it never goes up, you can lose because that thing can become worthless. So I have been talking about covered call. If you have more than 100 share, at the same time, implied volatility, if it is higher, the premium will be higher, so you can sell the same call option at a higher price, and if the share price never reaches that particular strike price, all the money you are getting just because of selling that covered call, that will be in your pocket. Make sure do not do naked call option selling, right? Because if it goes to $60 and you sell this call at 20, then you have to pay. Anyway, always try covered call. That is the best one because you never lose anything. Okay, so anyway, just wanted to give you an update. So again, watch pre-market and look at the chart. Make sure if it comes around 13.3, watch the support. If you want, you can establish some position or you can buy some call option. On the other hand, wait for this to break 16.3 area. Anyway, I will make more videos, and if you're holding CLOV, or you want to make more money with CLOV, or you are thinking should you get in, please subscribe to my channel because I cover CLOV and Wish frequently in this particular channel, and definitely with other stocks as well. So please subscribe and hit the like button, and don't forget to check my Wish video which came just 1 or 2 hours prior. So also check this particular video. This is also very interesting. CLOV and Wish, they are going side by side. So anyway, my friend, thank you for watching this particular video. Take care and peace.